money, and we just kind of take it for granted. And I really took it for granted up until about 2020. But I think in March of 2020, a lot of people's worldviews were shaken. Right? I had some deeply held beliefs. You know, one belief is everybody should work in an office, and you had to come and show up and work in the office. And then during the lockdowns, I found that I had to question that belief, and pretty soon we're all working remotely, and I, along with probably a billion other people, went through that same transformation. So that was like a digital transformation of work. In the second quarter of 2020, we had what we'll call a K-shaped recovery. But in my opinion, the K-shaped recovery was Main Street got shut down and locked down, and if you manufactured anything or provided services, your business was wrecked. And then Wall Street had a rapid, miraculous recovery within 6 weeks of the pandemic, and they had the best year of their life. And I could have basically sat on a floaty in my, pool in the Hamptons and got a 30% return in that year doing nothing, which would be the best year of my entire business career if I'm a financier. But if I was running a restaurant or running a manufacturing facility or doing something with raw materials, I would have had to generate 30% more cash flow to get nothing. You would have had, and of course that was impossible. So
can you explain to the average guy what that means, 30% more cash flow?
The value of the currency collapsed in the year. In essence, the Fed printed 40% of all the dollars in existence in the 18 months that followed the pandemic. So when Jerome Powell said, we're not even thinking about raising interest rates, and forecast 4 years of 0% interest, and when the Fed loosened the reserve restrictions on banks and allowed banks to, in essence, print infinite money with no reserve ratio, then the economy was flooded with liquidity. What happened was the stock market immediately recovered. People thought that was something good. It wasn't good. It was the money collapsing. It was the value of the dollar collapsing in real time against scarce assets. So most of the time, if you owned a portfolio of stocks, if you had $1 billion worth of stocks and your portfolio went up by 30%, you would have thought you were a genius in that year for doing what? For staying invested in stocks. Why? Because Jerome Powell printed 30% more money. Okay. If you didn't own a portfolio of stocks, if you thought you were going to work as a dentist or a doctor or do things in the real world, your business is shut down. The cost of all your materials is going up, your labor's disappeared, and no one's showing up to buy your stuff. The world doesn't look so good. So you had this dichotomy, I think, and the people on one side of the economy thought everything was just fine, and people on the other side of the economy got destroyed.